Assalamualaikum warahmatullahi wabarakatuh. Today we go into new topic, which is an additional topic for partnership, but the focus is on the limited liability partnership. Okay, so this limited liability partnership. So remember that in the last class, all right, in the previous presentation, we look into the conventional partnership. So what's the difference? That under conventional partnership, you have to determine what would be the income or the statutory income of each partner from the partnership. So in other words, we are saying that the income from the partnership is taxed on individual partners. Yeah, so that's why we have to compute your adjusted income, your statutory income from the partnership, and this income is a Section 4A income. But here we have the limited liability partnership. It's still a partnership, but it's a limited liability, or what we call LLP. Yeah, limited liability partnership. So we're going to look into this LLP. How is it different from the conventional? All right. So I'm Dr. Kharijah Muhammad Isa from Department of Accounting from International Islamic University. Okay, LLP, the tax status, right? What would be the cost principle? It says that LLP is a separate taxable entity. All right. So it's similar to company where we have the company itself and we have the shareholders. So the shareholders and the company are two separate entity. Yeah. Similarly for LLP. So unlike LLP in the conventional, the Malaysian Limited Liability Partnership is treated similarly to a company Sdn Bhd for tax purpose. This fundamental distinction means that the LLP itself is responsible for filing tax return and paying tax on its chargeable income. So in other words, in this case, LLP tax is on the LLP. Right? Tax from the partnership is on the LLP, not on the individual partner. The entity level taxation approach offers a significant advantage. Why? Because it eliminates double taxation on the distributed profit. Partners receive their share of profit without facing additional tax liability, and the LLP has already discharged its tax obligation at the entity level. All right, so it means that under the conventional, remember that we when we want to decide what will be the adjusted income of the partners, it will come from the PPE, the private partnership expenses, or the partners private expense, PPE, plus your divisible income. So these two income, all right, will be taxed on the individual partner. But here, all right, whatever tax liability of the partnership will be taxed at the partnership level. So to the partners, what they get, the remuneration, all right, whatever interest on the capital, for example, any other private private expenses will not be taxed on them. Yeah. Okay. LLP must file its own tax return and pay tax on its chargeable income, functioning as a separate legal and taxable entity under the Malaysian law. All right, so the LLP, the features here, I see that here we have who pays the tax under LLP is the LLP itself. All right, the entity level. For conventional, the partners pay the tax. So we call it as a pass-through the partners. From the partnership, pass-through income to the partners. Entity status is a separate legal entity, but here there's no separate legal entity. Yeah, means that and then we have tax avoided in the form of double taxation and disputed profit under LLP. This one is what we are avoiding, double taxation. But under conventional partnership, you'll be tax double, all right, double taxation on profits by nature. Yeah. The rates, all right, we do have this what we call standard and SME incentive. Yeah. So LLP income tax rate would be normally, because it's similar to company, the rate would be 24%. However, all right, if the company, let me see here, it said that the tax rate applied depends on whether LLP is SME, where your SME means that your paid up capital is 2.5 and below. All right, benefit of preferential tier rates means that for SME, they have the preferential tiered rates on the first 100,000 of the chargeable income, providing significant tax saving for smaller entities. However, other than SME, partnership will be LLP will be taxed at 24% of chargeable income. And then, okay, this one is for SME, where they have reduced 15 and 17 on the first 100,000 before they go into the standard 24%. SME tier rate. So this is how the summary is. Okay, all right. So for you to qualify for this SME, qualifying criteria is you must, for you to benefit from the preferential tax rate, resident must be partnership, LLP must be Malaysia resident, capital contribution does not exceed 2.5 million, and gross income threshold, they still have this, you cannot have your gross income more than 50 million for the relevant year of assessment for you to enjoy this preferential tax rate. Okay, tax treatment of partners. Partners are generally not taxed on the profit they receive from LLP. So that's the difference. As the tax has already been paid by the entity, this prevents double taxation and represent a key advantage of the Malaysian LLP. However, a critical distinction exists between profit distribution and partners' remuneration. While profit distribution are tax exempt to partners, any remuneration paid to partners as salary, bonus, or allowance follows different tax treatment. All right, the kind of payment paid, for example, in the case of share of profit, all right, tax deductible is non-deductible. Why? Because tax dividend is after tax. Yeah, so in arriving to your adjusted income, you do not actually deduct your dividend payment. For to the partner, the dividend distributed is exempted. All right, this will avoid the double taxation. But the remuneration, all right, yes, is explicitly stated in the LLP agreement, so it's deductible. However, all right, the remuneration will be taxed as personal employment income of the partner. So it will be under section 4B rather than section 4A income. So the crucial requirement for partners remuneration, to be deductible by LLP, the term must be clearly documented in the LLP. For example, how much salary to be paid, how much the interest on the capital, all these things must be clearly said for those expenses paid by partnership to the partners to be deductible. Right, failure to document this arrangement may result that the remuneration being disallowed as a deduction. Number one is that for those LLP that earns profit, they have to pay tax on their own. After tax profit, then you distribute to your partners, and therefore there is no double taxation for to the partners receiving exempt income in the form of dividend. All right, the compliance, in terms of compliance and filing, LLP must adhere to specific compliance requirements set up by the Lembaga Hasil in terms of the submission of tax return as well as the payment and record keeping. For example, annual return is the form PT, right? PT. Last time under conventional partnership, the form is form P, right? P for partnership. But when you have the LLP, the form is PT, all right? Return form for a limited liability partnership. The deadline similar 7 months after the end of the financial period. And then tax estimation. All right, they have to submit tax estimate CP204 to notify the estimated tax liability within 3 months of commencement of operations. In terms of the estimation, if you want to revise, yes, you can revise in the 6th month and a 9th month. It's not mentioned about the 11th month for partnership, but here it's only mentioned as a 6th and the 9th month. Record keeping, of course, everyone or all companies, including LLP, will have to keep record for 7 years, all right, for audit inspection in the future years. Audit exemption, small LLP are not required to have their accounts to be audited under the Malaysian law. However, they must still maintain proper financial records and make them available for Lembaga Hasil inspection upon request. Okay. So a summary, we'll see that understanding the Malaysian LLP is essential for partners, corporate advisor, as well as tax professionals. The entity level tax approach offers clarity whilst eliminate double tax concern. Number one is that again, entity is taxed at the 24%. Unless you are SME, you have a preferential tax rate. And again, under LLP, there will be no double taxation on the income, profit, or distributed to the partners. Number four, in terms of partner remuneration, is deductible provided that is clearly mentioned under the LLP agreement, and the filing requirement is through Form PT within 7 months after the financial year end. All right, so you have to keep record for 7 years, clearly document all relevant information, for example, especially your LLP agreement, as well as get professional advice if you have any issues with regard to the compliance of tax in relation to the LLP. With that, I end my presentation. Assalamualaikum warahmatullahi wabarakatuh.